Climbing to another record high, nearing $1,300 an ounce. Investors have been buying up gold as a safe investment while stocks stagnate and the bond rally slows. And yesterday's Fed decision suggesting further easing, of course, adding to the gold frenzy. Joining us right now, someone who calls himself a perennial gold bull. Jeffrey Nichols is an economic advisor to Rosalind Capital. Good to have you back with us, Jeff.
Good to be here.
All right. So what are we? We're up the 10th year in a row on gold. Another record today. First of all, let's talk levels. How much higher do we go from here?
Well, in the short run, I think we could see a bit of a correction, but by the end of the year, I think there's a good chance we'll see $1,500 an ounce, and in the years ahead, $2,000, $3,000, and
it
maybe
just keeps
higher.
Going up and up and up and up.
The potential is really great. The gold market is a very small market compared to world equity or currency or bond markets, and even a small shift in portfolio preference away from those bigger markets into gold has a tremendous impact on the gold price. And the world of gold investing is getting bigger and bigger. The Chinese, the Indians, Southeast Asia are all hungry for the yellow metal, and buying from that part of the world is going to increase. So that's a big plus.
You know, Jeff, it makes sense if you look at it as a hedge against inflation, with fiat currencies constantly losing more and more value as time goes on and we print more money. The price of gold would have to go up. But in some senses, it's kind of an emperor wears no clothes situation, right? Because you can't really use gold for anything besides like fillings and space shuttles. So, I mean, is there a fear that at some point the bomb falls out and someone goes, oh, wait, we can't use this. This isn't useful for anything. It's not like oil where you can drive with it, you know?
You know, you say that, but gold is the only investment that has a history of thousands of years of retaining its value. People have always made that criticism of gold, that it's a non-yielding asset. But if you own gold at the beginning of the year and you look at your yield today, you're up about 15 to 20%. Right. What else can meet that?
It just seems kind of like wampum to me sometimes, right? Because
but it's 10 years and counting at this point.
And we talked about
stocks in 10 years we know have done what? Nothing. They've not really gone anywhere.
We talked about Asian demand. You know, Asians have been buying gold for the millennia, generation after generation. It's a traditional form of saving. It's not even an investment. It's a form of saving. Although it doesn't pay
a dividend, you don't get really income from it.
I've owned many stocks that don't pay dividends.
But they're very
and then they've gone down.
But how much of what's going on with the gold market and the price of gold at this point, Jeff, is the result of demand and real strong fundamentals versus just a weaker dollar and so on?
It's both. I don't think you can separate the two. We've seen a significant shift of interest by central banks into gold in the past year. Even last week there was an announcement that Thailand bought several million ounces. The week before that it was Bangladesh. There's a growing list of countries that are buying gold. They see it as a dollar substitute in part, but these are long-term holders. They're not going to turn around and sell it anytime.
You don't think once kind of the economy, the global economy really kicks into full gear, that everybody will shift that money into other assets?
I don't think so. Moreover, I don't see the global economy shifting into gear. You know, I see the Asian economy is doing well. But the U.S., I think, and Western Europe has years and years of what I would say stagflation, like we saw in the 1970s.
Right.
You know, low growth, intermittent recessions, and importantly, during that period, commodity prices went up, oil prices went up, and gold zoomed.
All right, hey, we're going to continue looking at this. Your prediction, $1,500 by year end, or maybe the beginning of 2011. Appreciate you spending some time with us. Jeff Nichols from Rosalind Capital.